Fintech Chatter TV. Presented by Tier 1 People. Leaders in Fintech Executive Search. Welcome to episode 132 of Fintech Chatter, the podcast show where I connect with Fintech leaders for a bit of a chat. I'm your host, Dexter Cousins. If you're watching us for the first time, make sure to give us a like and subscribe. And if you're listening to the podcast, make sure to follow us and leave a review. It really helps support guests like Damir Cuca, who joins me today from Basiq. Damir's joining me to have a bit of a chat about what he sees in store for the startup fintech industry in 2023. Damir, welcome back to the show.
Thank you for having me, Dexter.
Mate, Happy New Year to you. First one of the year, and I couldn't think of anybody better to have a chat with, given the work you've been doing in the startup and space last year. How have things been for you over the break?
Yeah, great, interesting. I for the people that don't know, I'm fortunate enough to have six children. We had twins 2 times, so we kind of cheated. So it's been incredibly busy. The age gaps are not very big either. So my whole break was spent kind of pleasing them. So making sure that we that they kind of balance out and enjoy the actual weather that's outside, and keep them away from those nasty screens.
Yeah, I think a break like that would give me a nervous breakdown.
Yeah, when I came to when I finally kind of made the venture to come back to the office, my wife just looked at me and said, "So you're leaving us? Your holiday starts." So,
yeah, mate, divorce territory, that
is. Self-inflicted pain. That's what I call it.
Yeah, and they say that startup life's tough, eh?
It's nothing compared to this.
Well, look, I'm sure a lot of our listeners do know who Basiq are, but for those who don't, could you give us like a little bit of a rundown as to what Basiq does and the big problem that you solve?
Yeah, great. Look, I think so. Basiq is a ever evolving platform. So I haven't that vision that I set out to create. I haven't reached that yet. We're definitely on maybe step 3 out of 10 steps. And really, what we kind of set out to do is to provide fintechs with the tools that they need to develop their application and deliver their services to market. So, and if you think about it from a platform perspective, the way we've approached this, and the first problem that we tackled is access to data. Data is fundamental to building any financial application out there. So you can't provide advice, you can't help customers budget, you can't help customers work out if they should get a credit or not unless you have access to the oil that in the fintech that we call data. So Basiq provides consented access to data. What does that mean? We provide the ability for fintechs to be able to securely access banking data, whether that's originally was via kind of screen scraping methods and now via CDR open banking. So we provide all the tools and services that enable them to be able to consume that, to be able to capture the consumer's consent, manage that, and then finally, once they have the data, all those insight services to be able to wrangle it. So really to make sense of it. So rather than just provide here's a list of accounts and transactions, we provide tools that enable them to identify consumers' income, expenses, and so forth as well. So that's broadly what we do. Last year, pretty big milestone for us. We set out to get kind of ahead of the curve into where we believe the future is kind of heading. And what we did in the platform is we developed payments capability. 98% of our customers, they use data. They also do payments as well. So we've always kind of left the task to them to work out, which provider they want to use for data, which provider they want to use for payments. And then we give them this hard job of working out how to glue the two things together. So we thought we'd make that really easy by providing them with payments capability and data capability that they're able to kind of work together. So effectively, we give them all the tools they need in order to build and launch their service and bring it to market.
That's super interesting. So how have you found has been the kind of reception and take up of that offering, Damir?
Yeah, great. I mean, like if I had if I had a dollar for every time I got asked, do you do payments as well? Since the beginning of time, we'd be much further ahead, and our valuation would be significantly higher. But you can only tackle one problem at a time.
Yeah.
particularly when you're building an actual platform business. So look, it's great. We already have, before we even kind of launched the product to market, we had phenomenal interest, and now we've got customers in production, executing and leveraging that. And kind of the part that kind of excites us most is when the two worlds come together. So when consumers start to use the data and then they start to do the payments, but when they merge them together, using data to initiate payments is a whole different ball game.
So CDR kind of came into play 2020, mid 2020, but Basic's been around a lot longer than that. Um, the kind of data play, I know it has circled very much around CDR and open banking, but what do you see is I guess where it's heading? Because from where I'm sat, it feels like the discussions that are happening today were the same discussions that were happening in 2018. Where do you see the kind of opportunity now within that space, Damir?
Yeah, for sure. Look, I think just to kind of give you, because I kind of consider ourselves right on the forefront. So we're fortunate and unfortunate enough to be right on the front of this kind of program and initiative CDR. So fortunate in the sense that there's unlaid tracks, so we get to lay some of the tracks ourselves, and unfortunate there's unlaid tracks, so we have to work out where to lay them and how to kind of do it. So if I compare 2018 to now, 2019 was a lot of talk. Fast forward to now, we're doing it. So we're helping customers already transition across from scraping over to open banking. We've got a lot of customers that are starting to put data for open banking as well, getting used to the consent models, getting used to this kind of paradigm shift as well. So I would say, that's a good kind of validation point for the program overall, the fact that we can. Last year, towards the end of last year, we kind of we were kind of sitting on the fence a little bit, because we always kind of have our customers in mind and thinking, well, just before we push them over to CDR, we've got to make sure it works. We've got to make sure it can deliver. Towards the end of last year, we built that confidence up through the customers that were willing to kind of go forward first and so forth. And what we're seeing is really promising results, definitely when compared to kind of scraping. And so what we kicked off last year was an initiative where we said, okay, it's time to move across. It's ready. And now we've been working with existing customers to migrate them across, and any new customers we bring on, we just put straight into the CDR program.
And from your side, I know that you're more of a kind of B2B play, but one of the big frustrations that I've had with CDR is that every discussion that I've been involved in, never has the C part of that been discussed. It always, the C word might as well be compliance rather than customer consumer, because
Yeah.
it's very much been kind of compliance driven. When do you think is the point that we're going to start to really see the benefits? The kind of utopian kind of view of CDR was that it would give businesses the opportunity to tailor make products and
Yeah.
change products. When do you kind of see that happening
Look, I
through
think
CDR?
it's a really good question, and there's multiple dimensions to that. First of all, let's not forget that CDR was first rolled out to the banking sector, so effectively the government, um, told the banks, hey, you need to provide API services to expose the data. So the reality is that, and now CDR is getting obviously rolled out across energy and telco soon and so forth as well. For energy and telco, it'll be a new concept. This data has not been available programmatically, haven't been able to consume it. So that's going to be a very different approach towards banking. So for energy and for telco, we're going to see, we're going to have to sit there, scratch our heads a little bit to work out what all the different use cases are that we can use it for. Some will be immediate and very obvious, and others we'll just discover over time. If we go back to banking, we've had access to programmatic data for a very, very long time. I mean, when I launched the business in 2017, that's fundamentally what we've been providing ever since, is programmatic access to financial data. Open banking wasn't around, so we had to leverage tools like scraping services, digital data capture, whatever you want to call it. So we've realized those benefits. It's a no-brainer. We don't have to prove whether that's going to deliver or not. It's been delivering since the beginning of time. I don't know. I would say well over 80% of fintechs out there, particularly anybody offering lending services, will use a data aggregator like Basiq to be able to consume data. So those use cases are already proven. Now, for banking specifically, we've got the job of how do we migrate them over from web scraping over to open banking through, which is effectively CDR. So I think that's the kind of challenge for that. We don't have to prove the use cases that work, but the other ones are going to be quite interesting. The other industry segments that are kind of like coming up next, and what we do with the data will be quite interesting.
Yeah. No, you talked there about when you started Basic in 2017. What was the kind of genesis to you kind of coming up with this concept and kind of identifying the problem?
Yeah, so look, it started a lot sooner than that. So I how to identify the problem. Look, I had a business, another business before this as professional services. So we were guns for hire. We would build all kinds of products, services for other businesses. So it wasn't our own. We were just, you need a problem solved, you'd contact us, we'd go and build it for you. I got tired of building software for other businesses, and what I also wanted to do was to, fundamentally solve a problem in this world, or something that was kind of quite close to me. And when I sat back and thought about, okay, well, what are the different, what is the problem? What's something big that I can tackle with, that I think I can provide some kind of value in? So one, if I look at the driver, it was my, I guess, personal background driver. So we came to Australia as migrants. Well, we're originally from a country that doesn't exist anymore, Yugoslavia. And my parents came here like mini migrants here. We were poor. There was no kind of future outlook. My brother was born as well, and my dad's like, I can't. We just can't support the family anymore. We need to kind of find some kind of escape hatch. And we're fortunate enough that my mum has had an auntie here in Sydney, in Australia, the land of opportunities. And my parents made that big hard pilgrimage to come across. Don't know how to speak English, don't know what the system's like. I think even when we left, we were in the middle of European winter, and my mum's like, it's going to be snowing over there as well. So she rugged us up. We come in here, 1987, in one of the hottest summers in
Yeah.
Australia. It was insane.
I actually did the reverse, right? When I moved here in 2004, arrived at beginning of July, having never been to Australia before and only seeing like Home and Away and Neighbours, thinking everybody wore board shorts and
Yeah,
t-shirts.
that's right.
So I rocked up with all t-shirts and jeans and shirts and shorts.
Oh, you
And
were
it was,
smart.
yeah, I think it was about 3 degrees on
Oh, right. Okay. The very rare time. So, so I think, that's where, that was one of the kind of drivers. And it was quite interesting. I'll tell this story a bit, but I think it's really important because, it shows, like, it's almost, to me, it's not just a history of myself, but history of finance and how it's kind of evolved and changed over time as well.
the.
So it's, one of the things that I realized as a kid, particularly for parents who weren't very literate financially, investments, term deposits, interest rates, we didn't know what that was. Like, so, as a kid, my parents would drag me into, every time they go into a bank, they drag me in. Here I am, a kid going in there saying, "Can you translate what he's saying?" I'm like, I don't know what he's saying. So I think I formed this view that finance is waffle, for
Mm,
a long time, and kind of, even kind of growing up, I think, why is this so complicated? Like, why is this so hard? So I think that was my driver. But where I saw the opportunity was that I've got a very strong engineering background, and I just saw this fundamental shape shifting of money going from something that we carry in our pockets to something that's digital and sits in a database. And there's nothing the software developers love more than data, because once you've got a lot of data in a database, you can do, all the capabilities of what software can do becomes
mm,
quite exciting. So I looked at that paradigm shift, and I was looking at it like, why is it so complicated when it's all sitting in a database? We can do so much more. And then when I looked at my own personal experience, every time I have to encounter money, all I see is a list of accounts and transactions, and I'm like, where are the insights? Where's the smarts? Where's the intelligence?
mm.
Where's all this stuff to help me, um, you know, enrich my life, meet my goals, be in control of that, the finances? And that's effectively where the light bulb moment kind of went off. And then, here we are now, Basiq.
Yeah. So that upbringing that you had as well, I want to talk about that because um, one of the things that I think is a quality that you've instilled within your business, and I think it's probably been pretty tough for you um, pre 2022, which has just been to be very prudent around spending, be very careful around it, not kind of blowing the budget, being very considerate with investors' money, not
Hmm.
scaling too rapidly, not kind of going and chasing all the bright, shiny things and the vanity metrics as well.
Yeah.
There was a lot of pressure to do all of those things kind of up until the mid 2022. And then all of a sudden, that's changed and it's a very, very different environment. How have you found that that kind of approach now has set you up for this different paradigm that we're in now?
Yeah. Look, I think it's look. I mean, one thing I'll be one thing that I'm still kind of scratching my head trying to like work out is, where did things change? When did it become normal to, execute a business without a plan and, spend crazy and,
Yeah,
and all of that. So I think that I see that kind of scratching my head, and I think Silicon Valley plays a pretty big kind of
yeah,
role in that. It's all about kind of power bases and stuff like that. When you've got too much capital, not enough startups, then the position is in the startups' hands. You can kind of demand all kinds of crazy things. Obviously, the moment that changes, you have to be a lot more prudent. You have to be a lot more careful with money because now there's a lot more diligence that's happening. And look at FTX. It's a great example of a
yeah,
company that was able to just pull wool over everyone's eyes. It just wasn't due diligence being done.
yeah,
And I heard about kind of scenarios where big capital firms even kind of spoke to FTX. I was kind of hearing, and he was just like, he'd say, F off. You don't like the terms, F off. That's it. That's all
yeah,
I'm taking, and kind of move forward. So, look, I think it's, for us, it's, there isn't a fundamental change. Like the goal's been very clear. We know exactly what we need to do. We're not playing a short term quick game here. We're playing a long term game, and you
mm,
have to when you're a platform business. And for us, it's just, nothing's fundamentally changed. To be kind of head down, execute on the goals and the plans, and let's kind of move kind of like forward.
yeah. One talking about that kind of Silicon Valley thing, I think one of the frustrations that I have is that there's this kind of vanilla advice that comes out that and the advice right now is, or cut costs and increase sales.
Yeah,
It's like, well, that's what you should be doing all the time, as you pointed out, right?
for sure.
And
Yeah,
it's like, I mean, which founder hasn't been trying to find additional revenue streams the whole time they've been in business, right? I mean,
correct.
it's just like something you're doing all the time. And then there's the pivot. Oh, you got to pivot, and it kind of seems to me as if as soon as the market gets tough, the natural reaction is to go and look for another pot of gold somewhere else that everybody else is looking at that same pot of
Chat
gold.
GPT.
Yeah, yeah. Look, how did you kind of come to that kind of recognition and realization of the payments piece, which wasn't necessarily a pivot. It was more of a, hey, here's just providing something and bringing two things together that we're already doing, and kind of making putting one and one together and making four. How did you kind of get to that point?
Yeah, for sure. Look, I think it's uh, a few parts. Like I'm not, and I think any business should not be kind of should be kind of influenced by volatile emotional decision making at
Mm,
all, right? It's very easy for a VC to say, "Oh, shift left, shift right."
yeah,
For businesses, that's a lot harder to do. So I know that nothing will. It's all about what the end game is. Nothing will please investors more than having a 10x plus kind of exit. That's the key, right? As far as they're concerned. So when I kind of think about any of their kind of emotive states, I'm almost like, you know, I'll weather any kind of storm in terms of that, and as long as I make you money at the end, you'll be happy. So that problem's kind of taken care of. But the most important part is sticking true to the core value and what you're here to kind of provide to do. You're not here to play some silly kind of Silicon Valley game. You're here to deliver value to your
yeah,
consumers at the end of the day. So to us, that's kind of really important, and I think that also needs to be kind of put into considerations also from what is your kind of north star, what is the number that you like chasing. Yes, at the end of the day, it's capitalism 101. It's all driven by revenue and stuff like that. There can also be a danger in chasing that as well, because you can kind of take if you take it too short of strategy approach, you could effectively, for a business like us, we could just say, well, why don't we just get the top four major banks in Australia, and they've got deep pockets, and let's kind of go after them and that kind of stuff. So um, that's great, and we'd love to have them as like customers, and some of them we do, but but the reality is that you need to kind of work out exactly what you're here to do. What is the core value that you're here to like deliver? Which metric is the most important one, and
Mm,
you got to stick to that plan. I think having it's one thing to react to external market influences, but it should be anything that really gets in the way of your delivery of the value, rather than some kind of murmurs on the side, because
yeah,
there's always going to be distractions in a business.
yeah. Um, and I guess from your kind of experience, you talked there about your life experience and upbringing and how that's influenced you. As particularly as things get tough, have there been any other areas that you've gone for inspiration? The podcasts, mentors, kind of what have you done on that side?
Yeah, yeah. I mean, look, I definitely in terms of definitely in terms of podcasts I love. I listen to yours. I have to give you a shout out. I love it. I'm a
Thanks.
fan. I've been since the actual beginning.
You're the
What I
one.
love, like what I love even more is the personality behind it. But that's one. At the moment, I've got a bit of an obsession with the All In podcast as
Yeah,
well.
everybody
Um,
seems to be listening to that at the minute.
Yeah, in fairness, I've been listening to Jason Calacanis, David Sachs for a long time. So when they kind of came together, I was like, this is awesome. So, so I think that's a pretty good source. I like that because it kind of broadens my kind of perspective of the macro environment and what that kind of like looks like. But in terms of inspiration, and so forth, I think like for me, I find that in myself is the kind of key. One of the things that I realized from my previous business to here is that my previous business was like, hey, I just don't want to work for someone. I just want to be independent. That's how I started with that one. This one I started out of a genuine passion. So a passion to solve a specific problem, passion to bring something new and unique to the market. And it challenges me every single day. So there's not one day that I kind of wake up and think like, oh God, I got to go to work. I'm really excited to go to work.
I'm not surprised you've
Um,
got 6 kids at home.
yeah, well, I knew you'd throw that one in. But I really love what I do. It's
Yeah,
great because it helps me kind of bridge that business gap, tech gap.
yeah,
Aligns those worlds together. It's just fun, and
yeah.
also what's
This,
happening in fintech in Australia at the moment. It's like
yeah.
wow.
Look, and I think that's kind of something that came through last year in a lot of the interviews that I did. Yes, and whatever way it was turned, but it was really, I think, founders being able to kind of find a source of energy and or an outlet for their creativity through the business, and the parts of the job that kind of drain the life out of you is how do I do less of that and kind
Yeah.
of get people that are better at that who actually get energy from that and I focus on the things that I do really well.
Mm.
And I think it's super important even in my own business, right? It's like I was just thinking about this today. It's a kind of expression of who I am as a person versus I've got a family and then I've got a business and then I've got this and then I'm other interests. All of those things I try to bring together in the business and kind of play to your strengths.
Yeah, I mean, it's important. Like the other thing that I've always got is this perspective of time as well. It's like it's the only thing. Money can come and go, but time once it's gone, it's gone. So
Yeah,
I'm kind of very conscious about making sure that um, any time that I do kind of spend while I'm fortunate enough to be on this kind of planet is to make sure that it's towards things that I love. So
yeah,
to me, that means my family and it means business.
yeah. Now, kind of moving on our kind of second part of the chat today, Damir. A bit like myself, you're kind of heavily I guess centered in the startup space. You've done some great initiatives over the last 12 months to help the community as well. And I wanted to get from you kind of your sense as to what 2023 has in store. I was really interested. You mentioned a couple of things there because it's something that I've been seeing as well. Which there's a few areas that I think are going to do really well this year. Payments is one, lending is the other, and I think kind of business cost expense that kind of
Mm.
style of software, kind of cost control, collections, etc. I think could do really well as well. But I was really just curious to kind of get a sense as to what you're seeing and what you're seeing the demand and the kind of new breed of fintechs cropping up.
Yeah, for sure. Look, I think um, one thing one thing that's really exciting is I guess what's playing out in our own kind of backyard at the moment. Um, and it is somewhat reminiscent of what's happening globally. But I would say from all the research that I've done and being in tune, I think what's happening in Australia is probably one of the most exciting things and turns in the whole financial kind of ecosystem. So I kind of describe them as three separate tidal waves. The first tidal wave is CDR, which is effectively the government kind of waving their magic wand across an entire industry segment and say, you're going to provide API access. And that's, you're going to make customers' data accessible to other accredited third parties. That's insane. It's fantastic because freeing up that data, having access is going to create use cases that we haven't foreseen before. A good example of that is energy, leveraging energy data, leveraging telco data to, for example, work out what your credit score should be. That would be kind of quite exciting. Or, and even comparison services and so forth. We've got supers, I think, eventually on the hook as well. If the politics don't get in the way, I think that's a phenomenal amount of wealth and money at a
$3
personal
trillion,
level that,
right?
yeah,
It's huge.
that we have stored that we
Yeah.
just don't have, we have zero engagement with.
Yeah.
So I'd love to see more of that. So I think that's one of the tidal waves. The second tidal wave is this payments infrastructure, where for the listeners that maybe are not aware what's happening in the industry and the market is that you know the the banks have got together and what they've said is let's build a network where we plug into each other directly and to be able to provide real-time payments. And if you're kind of sitting there scratching your head saying, don't we have real-time payments? Kind of, yes, no. Yes, we do have it for the card network. So Visa and MasterCard provide real-time. So every time you tap, there is a real-time transaction that happens. Um, yes, we can now, for this new infrastructure, we can proactively push money to other people through Pay ID services. That's a direct real time service using this new infrastructure. But what we don't have the ability is for businesses to collect money from consumers in real time. That's still done through old direct debit, BEX rails, batch systems, 2 days, all that kind of stuff. So, and that's a nightmare to manage. Having that infrastructure in place is really going to level the playing field when it comes to kind of when it comes to kind of the options that are on the market. So I think a big transition of that will be everybody will be switching over from old direct debits over to this new payments rail. So it'll all be real time. So at the moment rent needs to be collected, you push a button, it'll collect. There won't be a 2 day process and so forth. And then it'll also kind of provide healthy competition for the card networks as well. So Mastercard and Visa have obviously provide this infrastructure that powers the entire world to be able to do this. But now we're going to have a local kind of competitor that'll be able to provide an alternate mechanism for that as well. So that's the second tidal wave. And the third one is what's happening in the identity space, so TDIF. So this new identity trust framework as well, where the government's also developed a brand new kind of framework in terms of how do we accredit and identify kind of identity providers, and has a whole kind of scheme around this. All of a sudden, we're going to have, this is fundamentally changing the way business is done, the way we use these services. So it's effectively covering identity, data, and payments, which is going to fundamentally, in the scheme of things, put Australia on an exceptional, you know, heightened level global in terms of from a technology perspective and what's kind of like possible. So they're things that I'm really kind of excited about, and just we're kind of monitoring.
Now, you in terms of, I guess, kind of investors that you've got at Basiq as well. There's some seriously kind of like huge organizations that have got behind you. Can you share with us a little bit more about who's backing you and kind of some of the partnerships that you've been able to put in place because of that?
Yeah, for sure. Look, I think, and this is a advice for anybody else out there looking for kind of like capital. There's the capital can come in different shapes and sizes. You've got traditional VCs, but you've also got good strategic companies as well that can provide alignment with. For me, I'm a relationships guy, and I think I'm always kind of looking at a little bit kind of beyond the initial transaction. What does that look like? So what was really important to me is every time we kind of raise capital is to look for good strategic alignment. So companies that can not only provide capital, but where we can add value to them and they can add value to us. Whether that value is through kind of enhancing our existing product suite, enhancing our distribution, or co-developing something new. So if you look at some of the investors that we've got Visa is obviously a tighten in the whole kind of like payments landscape, and we're doing a lot of really exciting things with them. Salesforce has been fantastic for us, particularly in the initial phase. We actually developed a Salesforce solution that's to bring kind of financial data into like Salesforce. We've got Plaid, who does what we do, but is just worth quite a few zeros more. Helping customers internationally come over locally, and vice versa, helping Australian businesses that want to go globally, put them in touch with the Plaid team, and we can do a really good kind of deal for them. So there's always been this good kind of strategic alignment and fit that we've always kind of seek from all of the investors that we actually brought on.
Awesome. Now you've also, as I mentioned before, been giving back to the ecosystem as with particularly with the startup space. Do you want to share with us a little bit about that initiative and kind of what kind of results you've seen from that?
Yeah, for sure. Look, I think it's incredibly important, particularly for a small ecosystem like Australia. I think we all need to be kind of really supporting it, and I think that's probably one of the things that I'm a little bit kind of disheartened by is that I've seen that support kind of taper off a bit. And we've seen, and nothing hurts me more is than when I hear kind of criticism of somebody criticizing local fintech startups, and I'm like, they're just starting off. Like, give them a break. Like, if you kind of like, it's very easy to bash someone who doesn't have the resources, doesn't have the capabilities, and is trying to kind of make it out there. But they're absolutely integral and important to a thriving economy. Like, we need small businesses, we need fintechs, we need startups for Australia to remain innovative, for us to be able to make a mark, and for us to ultimately provide more, to the consumers, a lot more choice, flexibility, and freedom. And it forces the big players to move as well through that. Like, if no one's challenging them, they don't have to move, right? So they kind of resort to their normal kind of compliance, risk-free kind of self. So I think it's really important, and that's something we've been really kind of proactive about, is to say, well, look, how do we support the ecosystem? How do we give them the resources that they need to go to market? And we know the things that they're kind of sensitive to. Cost is a really big factor. So one of the things we launched earlier on is our Launchpad program, which effectively gives them kind of pretty much free access to our service. We've since partnered with cloud providers as well. Recently we partnered with AWS to also give them credits. So not only do you get free access to our services, but we also can provide you with AWS credits as well, just to alleviate any kind of hosting costs and fees and stuff like that as well. So and then we also organize events like we've got pitch nights. We organize kind of sessions where they get to meet with VCs as well and stuff like that. So any way that we can help, we'll definitely kind of continue to kind of do so, because that's effectively the future. And it pays off for us as well, because we're hoping one of these businesses someday will become the next Afterpay, and will make a phenomenal mark on the world. So for us, it's all about kind of support. So.
Yeah, cool. And are there kind of any companies that you want to reference that you think we should kind of keep an eye out for in 2023?
None specifically. Look, I think like every,
Put you on the spot there.
no, it's like, like we have a lot of kind of like, we have well over 150 businesses that are on our platform.
Wow.
We've got, we've had like, we surpassed, I think it was like, it was November last year or something. We had 2.5 million Australians that effectively gone through the Basiq platform for any of those kind of customers that we have. And our customers are big and small as well. So we work with enterprise banks. We work with, two-man startups who just kind of started, hasn't even registered the ABN as well. So, we provide them, we work with all of them, and every single one of them is a specific solution or purpose or problem that they're trying to solve. So we're very kind of supportive of all of them, whether it's, I'm not one to kind of question what's important to one consumer versus another. So, for me, it's important that we continue to see the innovation, that they continue to push the limits and try to do more with the capabilities and services that we actually give them.
Right. So I got a question for you.
Go for it.
Is Sydney's northern beaches now the Silicon Valley of Australia?
I hope so. I mean, look, we've got it's becoming pretty vibrant here. We've got Cape is here. We've got Avoca that was acquired by Temenos
Yeah.
is here. There's a whole heap of other businesses that are operating now from the satellite office. So a lot of the founders live in Manly as well. So it's even kind of weird. I'm going to put him on the spot, but walking along Manly Beach and I bump into Mr. Open Banking himself, Scott Farrell, sitting there, and it's kind of like we've got even venture capitalists. A lot of them are kind of in
Yeah.
this area as well. So it's definitely become a pretty vibrant place for it. But what COVID's taught us is that, particularly in our line of work, we're very fortunate we can work from anywhere. And look, Manly's not far from the actual city, so
Mm.
we're very fortunate to be here.
And have you found it's been easier to kind of attract talent, particularly over the last 6 months, as we've seen there's been, unfortunately, redundancies, and there's not been anywhere near as much of the hiring that was going on previously.
Yeah, look, I think, I mean, for us to be able to attract talent, fortunately for us, it hasn't been a challenge. Like, I think we're fortunate in the line of work that we do. It's very exciting. We're in the forefront of it. So I guess anyone who's really kind of looking to extend their career in financial services and wants to kind of have that new repertoire tools and services, CDR, pay to all those kind of things underneath the belt, Basiq's a perfect place for that. It also makes it a bit kind of challenging because then everyone's after our staff as well. So I think from that point of view, yeah, I mean, something that I've seen in the market is, we look at what's happening in the US. There's been a phenomenal amount of redundancies and layoffs and so forth. I'm always a little bit kind of, one thing that I've seen kind of Australia do, and I don't know why we keep doing it, but we keep doing it, is we try and make other other world problems our problems. It's almost like we're trying to kind of like fit in, like, oh, they've got a problem, oh, we've got this problem too. But the reality is Australia is so different. Like, it's a very different ecosystem. We're very fortunate. We're not a big population. We're definitely a big country, but not big kind of population. And overall, you look at even if you look at the investment ecosystem here, we don't have a lot of VCs, but there's a lot of capital here that still hasn't been deployed. Very different to what's playing out in the US market, where startups are being told, like, we can't support you anymore and so forth. So sometimes I feel like we jumped the gun a little bit too soon on certain problems, but I'm very kind of bullish and optimistic that Australia can weather whatever storm's happening
Yeah.
globally.
Awesome. And what can we expect from Basiq in the next 12 months, Damir?
I guess what you can expect is more of what we kind of delivered over the last year, but just amplified. I think for us, it's number one, continue to evolve the actual platform. We want to deliver as many of the services that fintechs need to get to market faster, make sure that they can access data that's important for them in a secure way. We want to definitely kind of up the ante on the support in terms of the ecosystem and see kind of what more we can do in that space. And for us, it's we're also evolving as an actual business as well, kind of getting into sectors outside of financial services alone, particularly as CDR gets rolled out into different segments, and this whole kind of concept around embeddable finance, where finance just becomes a feature of other kind of services and applications. We're seeing ourselves enter into new kind of industries as well. So that'd be kind of quite interesting the way that pans out. And obviously, every time we do anything for us, it's always sitting back thinking, how do we productize this? How do we make this available to everybody else? Which is the key, so they can deliver on the innovation going forward.
Do you see that as a genuine opportunity, or is it kind of more management consultant talk to try and keep them in business over this 12 months?
Who specifically? What do you mean?
So I guess there's been a lot of talk, from the management consultancies. I think even one of them has come up with the term MFI,
Okay,
which
I haven't heard of
I
this
thought
one.
was the kind of that was the nail in the
Yeah,
coffin for embedded finances. Yeah. Do you think there's
yeah.
a genuine opportunity there, or do you think it's still a way off before that?
Nah, look, I think these like those three tidal waves that I described, these are not theoretical anymore. These are happening right now. So, um, but the one thing that's always guaranteed is that businesses will, competition will always increase. Businesses need to stay ahead of the game and so forth. So that's there's always this inertia. No business can afford to not do anything. So they always have to kind of like move kind of forward, optimize, improve efficiencies. every single business that does anything with finances, whether it's taking payments, accessing data, leveraging identity services, will be challenged. They'll have to kind of work out how this applies to them and what they do with these new kind of tools that have phenomenal kind of opportunities to, enable them to compete in new ways that they haven't, you know, been before, but also to implement those efficiencies across the actual business that, particularly in this market, they need. So for us, it's a little bit, it can be a little bit daunting for some companies out there who are kind of sitting back and saying, what the hell does all this mean? Fortunately for them, there's companies like Basiq that can deliver those services, package them up, and make sure that it's really easy for them to engage with.
Which is really leads nicely on to my next point. If there's
Mhm.
anybody out there listening who is interested in the Basiq platform, what's the best way for them to find out more?
Easy jump on our website. Like, one of the things that we really try and do is to remove any friction, when using our products or services. So jump on our website, have a read. We've got API services, we're very rich sandbox. We want you to ideally start coding and developing and testing before you even talk to us. And when you're ready, get in touch. The pricing's on the website. If you've got more volumes, we can always cut a deal. But I think that's, we're here to kind of support you. And if you're a startup early, we've got a launchpad program. We can definitely help you out there as well.
We also get amazing talent listening to this podcast, Damir. If there's anybody out there listening who really wants to find out more about Basiq as a place to work, what's the best place for them to go?
As well, look, I think the best place is LinkedIn. We're definitely actively seeking for quite a few roles as we kind of grow. And because of our, I guess, great success that we've had over the last kind of few years, we'll continue to kind of grow going forward as well. So if you think you've got value that you can offer, please jump in and reach out. We'd be very interested in talking to you.
Well, Damir, it's been fantastic to have you on the show, and what a great way to start off 2023 with such an optimistic outlook.
Thank you, Dexter. Always a pleasure.
And you can connect with me on LinkedIn and Twitter. Thanks for listening today. As always, give us a like and a subscribe if you're watching, and follow us and leave a review if you listen on the podcast. It really does help me support people like Damir with their businesses. Until the next episode, keep safe